I think that's an easy one. I'd buy with both fists because if we head into a recession, the Fed will have to turn, pivot, and pump liquidity in. And as they're doing that, they're going to hurt the U.S. dollar. And as the dollar drops, gold and silver is going to skyrocket. So absolutely, if you see the economy tailing down and you think it's going to be a hard landing, not a soft landing, if you think we're actually going to go into a full-blown recession, yeah, I would buy mining in a heartbeat. I expect it to be just chaos in the United States the last 3 months, which again just makes gold and silver the perfect environment.
Yeah.
But no matter who wins the election, when you roll into January, February, all they've done is won the right to inherit a nightmare. I mean, they've got a real mess on their hands.
Yeah.
It's kind of funny. I remember 1994, when I first passed my Series 7, of course, as a broker, you have a big party and you don't realize all you've done is, granted yourself the right to be in poverty for the next 3 years, as you're starting to put a business together. And it's kind of the same thing with the presidential election. I mean, whoever wins this election rolls into January, February, and looks at what they've inherited and says, "Oh, why did I take this job?" You're going to have a bank crisis. You're going to have a debt currency crisis. It's all going to come to a head, and it's going to be a real mess.
I guess that's why the Fed removed the line about the sound and resilient banking system from its most recent Fed statement.
Yeah. They constantly keep kind of changing their verbiage, and they tuck it inside there where a lot of people don't see it. But they also came out here just the other day and said that New York Community Bank is on their own. So they're claiming they're not going to step in and fix them because they saw that statement about the material weakness. But the problem is, if you let a bank like that completely go down, you're going to have problems. So they're going to have to step in there at some point, some type of receivership, and take care of the assets. But yeah, I think we've got a real problem all the way around. When it's all said and done, I mean, there'll be a lot of opportunities, though. And that's the great part about a country like America.
Yeah.
You can go through this horrible turmoil. Like right now, if you're Warren Buffett, you're sitting on a mountain of cash, and you're watching just absolutely trademark type buildings in New York City going at 50%, 60% discounts. Now you can sit back and choose and say, okay, I'll buy that, hold it for the next 50 years. And you're going to make a lot of money when things settle back down. And that's probably what will happen. In the middle of all the tragedy and what's coming, there are going to be tremendous upside opportunities for people also.
Yeah, so I would agree with that.
Yeah,
so have the banks followed the ESG guidelines and shrunk their loans outlay to mining companies? And if so, how is this impacting the mining companies' ability to access funding? And ultimately, what impact is it going to have on supply?
At least in my case, going to banks for mine loans, you might as well just go to a fairy godmother. It's almost impossible. Most of the mine assets are brought in either through your own private placements or going to individual investment banks, private houses, family offices, private equity. Going to an actual bank, I think years ago the problem was you had so much fraud. They would actually give people loans off of mining permits. So guys would go out and get 100 different permits, run up these giant lines of credit, and then they never developed the mines, and it was just a fraud. So, they went back, they developed the 43-101, which was a smart move. And then they've cleaned that part up, but the banks are almost impossible to deal with when you're raising cash for mines. You would think the opposite. You would think, hey, geez, I'm going into a situation where this sector, I've got hard assets, and I can go to a bank and say, look, I've got these resources. Here's my 43-101. This is what's in the ground. But it's still very, very tough to get any kind of mine lending from a bank.
That makes sense. Well, so you brought up the invasion earlier and what the government has done with sanctioning the treasuries. And so since that invasion, central banks around the world are now buying 2.6 times more gold annually than they were before. This has put a floor under the price of gold, while at the same time, Western investors have been net sellers. This has created basically a bifurcated scenario where gold is near its all-time high, and mining companies, which is not a central bank purchase, seem to be trading at steep discounts. Thomas, in your opinion, what will bring Western investors back to gold, and will that be the driving force behind a gold mining bull market?
Probably a shock will bring them back to gold. You run into that overseas, when you see like the Chinese, and you started to see, when Evergrande was going down, they started to lose faith. So they go back to hard assets, gold and silver. Same thing in the United States. I think when you start to see a correction in the dollar, you see a good size correction. It's, the index is down around 90. People are starting to wake up and say, geez, maybe I should have something I can actually hold my hand and it's backed by something. Usually that's what happens. It's usually a shock treatment that takes place. As far as the mining companies go, I think what will happen is when people rotate into that sector, you'll see money flow in, and it's always a sector rotation. And at some point, people are going to look at maybe tech stocks and say, geez, the valuations on these are crazy, but look at mining, the valuations there is cheap. You hit them where they aren't. So you start to rotate, and that's where money will flow in. And I've been picking off, for my own self, I've been buying a lot of the juniors. But I think, Newmont's numbers weren't very good that came out here the last week or so ago, but still long term, I don't see it doing. It'd be pretty hard to fail buying Newmont and just sticking away and hold it. Yeah. But I look up there in the Golden Triangle, man, there must be 15 stocks. I would look at and say, geez, there's great potential in a lot of these. I like to look for companies where they're doing their drill tests. I like people to do their homework. So when I look at those, especially the junior miners, I look at who the CEO is. Do I trust them? Do I want to invest in him? That's part of it. And then I want to see their drill results. I mean, what are you doing? I don't want to just have an owner. When I bought my mines, I must have looked at 200 mines between the United States and Canada. And if they didn't have a 43-101, all you were doing was taking the word of the mine owner. Of course, they all hit the mother lode. It's like a guy trying to sell you his car. It's the greatest thing that ever happened, But if you have a 43-101, you can rip those numbers apart and really look at it. I mean, up there in the Golden Triangle, I like Goliath Resources a lot. I mean, they're doing a lot of really good, drill tests. Roger Rosmus is the CEO. He's a top-notch guy. Some of these guys that I like up there, they're guys you could hand your keys to your house to, and you could trust them, and that matters, in any kind of business, but especially in mining. But he's got some large backers in there. Crescat Capital, I think, owns about 19% of the company. He had McEwen in there. Sprott was in there. Right next to him, there's a Juggernaut Exploration also. That's another one. Dan Stewart's in there. It's almost like a sister company to Goliath. They share the same geological teams, so their properties are right next to each other. But I look at somebody like Juggernaut. They're a $5 million market cap, but they've got $1 million sitting in treasury. So to me, that doesn't make any sense. I mean, it's just, it's a company that no one's ever heard of. That's all. But when you look at their drill results, and then you look, they've got a nice tight structure, so they're not out there selling shares to the public, left and right. And they're sitting there with $1 million in treasury. That's a company, for me, that's worth looking at. So I like companies like that. I mean, I pick off a few down here in the United States. Arizona Gold and Silver, I really like that company. Mike Stark, he's raising some cash now. So I don't want to talk about the raise at all. That's something he'd do. But that's a situation there where I would invest in Mike Stark. He's just one of the best guys ever. Really good Canadian. Owns a mine down here in the United States. But if he was running a Dairy Queen, I'd invest in it because he's a good guy you could trust. And that makes up for everything. So I think that's the way I would do it. If I was an investor out there, I'd get on the phone. If you looked at something, you like it, then do your own due diligence. Don't take the word of your broker. Call the CEO. Ask him, hey, what are you doing? What are you working on? Tell me about your results. Are you buying more property? Tell me about your capital structure. Do you need to raise cash for your drill season? Are you good for a couple of years? Those are all big things as far as how the stock's going to perform. But I'll bet anything, if you look back 5 years from now, the Golden Triangle is going to produce so much wealth, it's going to be staggering. Because it's the last piece of just really untapped property of mineral with huge mineralization in it, maybe in the world. I do a little bit of business with some guys down in Peru. From a mining point of view, that's a great place to go. But geopolitically, it's really dangerous. You have no idea. Will a far left, leader take charge, and all of a sudden he wants to nationalize the mines? In Canada, I don't have to worry about stuff like that. I mean, it's still. I mean, we all complain about the United States government, complain about the Canadian government, but there's still good places to do business. So I guess as a mine investor, if you want to invest in the stock market, I would look at the Golden Triangle. And I mentioned those two. I mean, you can, I've got a list of them sitting here. I mean, you can go through Teuton Resources, Dolly Varden is a really nice one. Even Tudor. I mean, there's probably 15 you could buy and just stick away. Maybe just kind of make your own mutual fund, buy a piece of each one.
So staying on the mining theme, do you see an upcoming gold mining bull run equivalent to the early 2000s that's developing, or is it going to be, in your assessment, more similar to the 2015 and 2019, 2020 mini runs that were experienced?
Yeah, I think you're going to see several mini runs. Yeah, I think the first one's going to take us up into the 2400 area. And that's the part people trying to time the market. This is how they miss it. Like that 42-point move on Friday. Yeah, a lot of people probably missed it because they're trying to time it. And what will happen is all of a sudden it'll go to 2200 and the guy will sit there and say, well, I'm going to wait till it pulls back. And next thing you know, it's 24. And I think that's what's going to happen. You're going to have these little mini runs. All of a sudden it's going to go up 20% and you're going to be at 2400 and it might just go sideways. But as this debt and currency crisis unfolds, I think they'll start to pick up in frequency. And all of a sudden you're going to be at 26 or 28. And before you know it, you're going to be at 3200. But short term, I hate to put any, I know a lot of guys want and they'll put $10,000 target prices out there. I have no doubt that that's where we're going, but I don't want to put that target out there. I'd rather say 2,400 is reasonable this year and maybe 2,600 if things start to roll. And next year, if the Fed really starts pumping liquidity in, to see us at 3,000 wouldn't take much. Again, you're talking about another, maybe 20% year. So, and that makes up because you figure the last couple of years we've gone sideways. It always evens out. Long term, the stock market forever has averaged 10.5% a year. So if you're sitting there right now, looking at your 35% gains and thinking this is going to go on forever, it's not. It's going to equal out. So you're going to have some years where you're going to get some big hits. And same thing in gold and silver. You went sideways for 2 or 3 years. You're going to have a couple of years on the upside where it outperforms, and then it starts to even itself back out on the upside.
That's a great point. So BlackRock, the world's largest asset manager, is warning investor disdain for mining in general threatens the green transition, as starving the sector of capital will create shortages of metals, right? Can you describe briefly the capital flows into the sector over the last 10 to 15 years versus previous eras, and what impact you think this is going to have?
So far, I don't think that's had any impact on mining at all. Because, at least in my cases, I have not seen a lot of money flow from the banks into mining, period. Most of it's been coming from private equity, venture capital, family offices, or your own private placements. But as far as them trying to squeeze people on ESG, you can't say anything nice about it. They're just morons. You cannot enforce your own view on someone and say, I'm going to starve you unless you do exactly as we say. And they're beginning to come around. A lot of these people are now backing off of ESG and walking it back. And BlackRock's going to do the same thing because they're getting hurt from it. There has to be a balance, but I mean, I know a lot of good miners. I mean, when the good miners are done at a mine site and they do the reclamation, that property usually ends up not back the way it was. It usually ends up better because they're good quality miners and they actually care about the environment. So there's nothing wrong with mining. It's not destroying the world as long as you do it in an ethical manner. So that makes sense. I think miners can meet people like that halfway and say, it makes sense. You don't run water directly into a creek and pollute the water. Right. You don't take an ore concentrate pile and just let it sit there and leach into the ground. People did that years ago. There were entire towns that lost their water supply because some guy just put an ore concentrate pile on the ground and it leached. So you've got to be responsible about how you do your business. But as far as going all the way to the ESG, no way. They would destroy the economy if they went forward with what they're doing. And I see it locally, in Pennsylvania here with natural gas and coal. I mean, to do those things ethically there's nothing wrong with that. Those are just God's gifts under your feet. You should use them as long as you do it in an ethical manner.
Yeah, I agree. So, there's plenty of our viewers who own gold mining equities, and they are interested to know that if a recession is on the horizon coming up real soon, would you exit the mining equities and wait until the recession did its worst? Or would you see that economic scenario as being a positive for the gold mining equities, similar to during the Great Depression with home stake mining, how prices went up 600% and dividends skyrocketed.
I think that's an easy one. I'd buy with both fists because we head into a recession. The Fed will have to turn, pivot, and pump liquidity in. And as they're doing that, they're going to hurt the U.S. dollar. And as the dollar drops, gold and silver is going to skyrocket. So absolutely, if you see the economy tailing down and you think it's going to be a hard landing, not a soft landing, if you think we're actually going to go into a full-blown recession, I would buy mining in a heartbeat. That will be probably the hottest sector on the market.
That's interesting. All right. So, we've talked throughout this conversation about how the U.S. is just drowning in debt, 34 trillion, and it's being serviced by a budget deficit of a negative $3 trillion last year. I don't even know how that works. But Thomas, in your opinion, does the government continue to debase the purchasing power of the currency, or do they actually at some point soon have the stomach to stop the war spending, repair Social Security and Medicare, and balance the budget? And no, this is not a joke question. I'm being serious. And if they continue to debase the purchasing power of the dollar, what ends up happening to the treasury bonds and to gold?
Yes, they are going to continue to debase the dollar. They're going to spend until it breaks. And if they can make it all the way to 50 trillion before they break it, they're going to do that. They're addicted to spending. They don't know how to get off of it. It's interesting, too, when you start talking about, will they save Social Security? It's a fiat currency. If they wanted to tomorrow, they could just print the dollars and fund Social Security any way they wanted. The bigger problem, though, is what if they funded Social Security completely and then the whole system imploded because they just printed too many dollars? And that's what they're doing right now. And you can make that fair argument how we're spending the dollars that we're printing. I mean, you drive down the streets and the roads have potholes, the bridges are falling down, our schools are crap. I mean, so you sit there and say, geez, the richest country in the world, this should be like the city of gold. And you look around, you're like, it's like a slum. So maybe we just need to prioritize how we're spending it. But the government will just completely spend until they destroy the dollar, and then it's replaced with the new system. And what we got to hope for is we're the ones that set the new system.
Yeah.
In the woods, we got to set the new system. We became the reserve currency. If you don't have a war that you win and you get to set that standard, okay, well, who sets it then? Do the Chinese dictate it to us? And that's the danger of the next system. But my guess is you're going to have some type of a Bretton Woods deal and have everybody come together, and you're going to have a new standard of a commodities basket that backs it. But
I believe Zoltan Pozsar has echoed this very perspective, and that he sees one coming very soon. You may know who he is. So in the last 9 recessions, going back to the 1960s, gold's been up in every single one of them except one. Do you happen to see a recession coming this year in 2024? And I guess you'll say, yes, I see gold going up during that time too.
Well, I think as far as seeing an actual recession, they're never going to admit it. They're, like the last one where it dipped down 20 or 30%, they wouldn't admit that. And I would say, no, we're not going to have a recession this year because they're going to spend their way from it. Spending $2.5 for every $1 GDP. They're just going to keep that up through the election. Now, what happens next year is going to be a different story. And the fellow you just mentioned there from Switzerland, I find him to be almost a genius. I love what he says. I follow him. I've never talked to him directly, but I think he's spot on what's coming. And everybody sits there and probably says, he's a gold bug, or something like that. But look at the numbers. I mean, look at what's happened since 1971. You can't argue with the facts. You just don't notice it. When you lose purchasing power, it happens slowly, so you don't have that jolt. If somebody walked in and took 98% away from your purchasing power tomorrow, you'd notice it immediately.
Feel it. Yeah.
But if you spread it out over years, it just kind of slowly hits you. But I agree what he says completely.
So recently it was reported that more than 80% of the population owns zero gold. Yet last year in an interview, Ray Dalio, founder of the largest hedge fund, Bridgewater Associates, he said that we should all have a 10 to 15% gold overlay on our portfolios. Do you agree with Ray's 10 to 15% gold overlay for the generalist investor?
Yeah, I would say higher. Yeah, I mean, I
Higher.
think I think right now it's underperforming compared to other parts of the market, but you're going to have a sector rotation. And in the old days, they always had that fund that would come out every year, the dogs of the Dow, and people would go in and they'd buy the bottom part of the Dow because the next year that would always outperform. I think it was the 10 lowest performing stocks in the Dow. And it performed great over time because you were hitting it where it wasn't. People were going in and buying good companies that were depressed and they were going to come back up. I would say in this case, you're going to see a sector rotation into gold and silver. I would certainly over allocate the mining sector, gold, silver, platinum, and maybe under allocate some of the other areas. Bonds right now, people have gotten killed in bonds. And I know there's a lot of reasons for interest rates to go up because of so much supply. But if the government starts to flood the market with liquidity and rate cuts, you would have to assume they're going to push that 10-year bond back down. The 10-year bond right now is at 4.186. It was 3.5% not too long ago. For them to shove that back down to 3.5 or 3 through injections, liquidity injections, that protects the banks because that helps them out on their treasury losses. The losses aren't there anymore. But I think if they did that, that buys them some time. They just keep pumping cash into the economy, for a while. That works for a short period of time, but sooner or later you're still going to get back to that net where the dollar is just not going to be able to hold up to this. When you pump in liquidity, you're printing dollars and putting them into the economy. How much can the dollar take of that?
That's a fair point. So, Thomas, you recently stated that you believe gold is going to be the last asset standing. Can you dive into that a little bit?
Right now, the U.S. dollar is the last dollar, the last fiat standing. And I think what will happen is one by one, they've gotten knocked off. When the dollar finally, hits its final demise, what are you going to go to after that? I mean, the guy is holding gold and silver. He's going to hold true currency in his hands at that point, that you'll be able to ride out a storm. So, and that's why I encourage everybody, when you buy your gold and silver, demand delivery. Send it out to you. Don't have it held in a vault. Certainly don't put it in a safety deposit bank at the bank, because if they close the bank for some reason, you're not getting into that thing, and you need it in your hands. So I think that's why I made that statement. I don't believe that any of the fiat currencies are going to survive. Throughout all history, every fiat currency has always died. So why would it be any different this time? And you can see exactly what they did in Germany when they debased their currency down to nothing. We're doing the same thing. And people have studied this in schools years after year and said, gee, what happened to the Weimar Republic? And you said, well, here it is. There's a guy walking down the street with a wheelbarrow full of currency. Yeah, at some point, I think it was worth more to them to burn the currency to try to heat their homes than it was actually to use it. I think years ago, down in like Venezuela, when inflation went crazy and their currency, got destroyed, they were putting prices in coffee houses on chalkboards because you were sitting there, the prices were changing. When you see those things, you say, geez, well, that'll never happen here. But then you follow the same policies. You print. You're just asking for it. I mean, sooner or later that's going to happen. And when that happens, the only thing left standing is, real currency was just gold and silver.
Yeah. So speaking of silver, Thomas, what can you mention on silver as we launch out into 24? Supply and demand, solar panels, gold silver ratio, new mines, new utilizations, monetary metal. What's your current silver thesis?
Yeah, although I always talk about gold, I think when we get into a real bull market in commodities, silver is going to probably vastly outperform gold. And in my lifetime, I've watched on both sides of it. On the upside, silver outperforms during bull markets and it underperforms during bear markets. And that's what we've seen here recently. Silver's sitting at 23.34 right now. It wasn't that long ago. It was sitting up around 30. I think you're going to see so much demand coming in. They're going to push at least a percentage of this new green environment deal on us. So solar panels, electric vehicles. So demand is going to continue to grow and grow. The hard part about silver, though, is if you got into a real bad economic turn down, you did go into a deep recession, silver would get hurt because it's got more it's more economically affected than gold would be. So that part you would see it get hurt, but I would say it would come flying right back up. So my outlook would be gold, silver, split your investments between there and platinum. Out of the three on the upside, silver is going to outperform them all, but at different time frames. And it would be the most, I would say that and platinum are both going to be pretty economically sensitive. So when the economy goes into recession, you might get hurt temporarily in both of those and not in gold. But sooner or later, supply demand always, is the thing.
Yeah.
In both cases, gold, silver, platinum, there's far too much demand for the supply that's out there. So prices are going to get pushed higher at some point, no matter what.
So some say that the gold to silver ratio mean from the last 5+ decades of about 50 something is now permanently altered to the 80s, where it sits now. Do you see this as the case? And if not, in your opinion, what will be the impetus for the ratio to revert back to the mean?
Yeah, every time they tell you past history doesn't matter, it matters. And yeah, I think we'll revert back to it, but it always happens in big gaps. I mean, I can remember the last time this happened, the gold silver ratio got way out of whack. Silver would clear down, I think, to like $13, and then in a blink shot to like 31. So when you get that gap and it widens out far enough, it doesn't happen overnight. You hit a ratio number and all of a sudden the buy orders come flying in, but it starts to send a signal to the market that it's coming. And then there's something that spurs it on and all of a sudden, bang, it takes off. So I would say, no, it's not permanently changed to a new number. It's going to revert back to its historical number. And anytime it gets too wide away from it, I would go in and I'd buy silver and just be patient. And that's why I would really encourage people to just accumulate monthly. Dollar cost average in on your gold and silver buys and take some of that out of it. But when you get the gold and silver ratio really out of whack, in those periods, if you wanted to increase your silver buying, that would make sense. Yeah.
Great. Well, before we wrap up here and I ask Thomas our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the interviews that we conduct each and every week, keeping what is important top of mind for you in just one simple destination. When you subscribe, you'll receive a free copy of a report that we recently wrote titled CBDC, Will the Coming Soon Central Bank Digital Currency Undermine Our Freedoms and Future? So head over to metalsandminers.substack.com and subscribe by putting in your email address. It is free, and get your free report on the likely coming central bank digital currency. If you've enjoyed this conversation with Thomas as much as I have, please let him know. Hit the like and subscribe button, and please leave a comment below. Okay, Thomas, in wrapping up our discussion, I've got a two-part final question for you. What's keeping you up at night that you're keeping an eye out for to potentially happen this year? And secondly, what haven't we spoke about that you want the viewers to know or consider for this year?
The part I would be most concerned about, I think, would be geopolitical. Do you wake up one morning and find out that Israel went full blown into Lebanon? That could happen in a blink of just a blink of an eye. Does China go ahead and take Taiwan? And when they do it, do they block off a lot of the gateways? Evergrande, the freighter, grounded inside the Suez Canal. Was it an accident or a test run? Those are a lot of questions people ask. I mean, would they just simply shut down supply, the global supply chain completely while they're taking Taiwan? Those are things that can just happen in a blink of an eye. I mean, we've seen the Chinese run, how many test runs with their jets. Well, one of them is not going to be a test run, but you don't know when that's coming. So I guess those are the things I think geopolitically would be the things that would keep you up at night. But my take on it, try to remove some of that risk from your daily life and just say, I'm going to accumulate metals monthly. And you know what? If something big happens, whatever, I'll buy more that month. If nothing happens, I'll just keep accumulating. Try to take some of the guesswork and some of the risk out of it. And then you'll probably sleep a little easier.
Okay. Is there anything that we haven't spoken about that you want the viewers to know or consider for this year?
No, I think people should just stay patient, stick to a plan, and just don't worry about what you hear on TV day after day. Just stick to your own plan, and accumulate over time, and you'll be just fine.
That's fantastic. All right. Thank you so much, Thomas, for being so generous with your time and your analysis, your ideas, and for coming on to the Metals and Miners podcast. It's been so good to spend time with you. Would you tell the viewers where that they can learn more about your work at Parilla Investment Group and how they can connect with you?
Yeah, the easiest way is just to connect me out on LinkedIn. I try to check in there at least once or twice a day, and that's the easiest place to get me.
All right, fantastic. Thank you so much.
Yeah, thanks for having me.